On May 21st, 2026, the United States government did something it had genuinely never done before in quite this specific way. It signed formal letters of intent to invest just over $2 billion into 9 separate quantum computing companies, and in exchange, it didn't just write a grant check the way the government typically does. It took an actual direct equity ownership stake in every single one of those 9 companies. For most of American economic history, the federal government has functioned as a customer of innovation, writing checks to contractors who build fighter jets or rockets, not as an owner of the underlying companies themselves. That fundamentally changed with this specific quantum computing deal, and today we're breaking down exactly where that $2 billion actually went, what the government now technically owns as a result, and whether this genuinely represents a credible bet on building the world's first truly useful quantum computer, or something considerably more complicated and uncertain than that clean, simple headline suggests. It's genuinely worth sitting with just how unusual this specific moment actually was within the broader arc of American economic policy, because the framing genuinely matters for understanding why this particular announcement generated so much attention well beyond the relatively narrow, specialized journalism. The Pentagon writes checks for fighter jets and never ends up owning a stake in. NASA pays private contractors to build rockets without ever taking an ownership position in Boeing or SpaceX as a direct result of those specific contracts. That's been the basic, standard operating template for how the American government has interacted with private industry innovation across the vast majority of the 20th and early 21st centuries. The government identifies a need, private companies compete for a contract, the government pays for a specific deliverable, and ownership of the underlying company itself remains entirely, completely separate from that transaction. This quantum computing deal represents the federal government genuinely, actively doing something meaningfully different, deliberately picking winners inside an industry that most ordinary Americans still couldn't confidently define if asked directly, and doing so by buying actual real minority equity ownership in companies whose core underlying technology may or may not ultimately prove commercially viable for another full decade or considerably longer still. That's a genuinely significant, meaningfully different kind of governmental bet than the country has traditionally made throughout most of its economic history. And it's precisely why this specific deal deserves considerably more careful, detailed scrutiny than a simple, celebratory $2 billion headline figure alone can adequately provide. Let's start with the actual mechanics of this specific deal, because the details genuinely matter here, considerably more than the simple, single headline dollar figure alone can adequately convey. The Department of Commerce, through its CHIPS Research and Development Office, announced it had signed 9 separate letters of intent totaling $2.013 billion in federal incentives, all funded specifically through the CHIPS and Science Act. That specific total broke down across 2 genuinely distinct categories of recipient: 2 companies receiving funding specifically to build domestic quantum manufacturing infrastructure, and 7 companies receiving funding specifically to advance their own individual quantum computing research and development programs. By far, the single largest recipient in this entire 9-company portfolio was IBM, which received a full $1 billion, exactly half of the entire program's total funding, concentrated into one single company. But here's the detail that genuinely matters, considerably more than that headline number alone reveals. IBM is matching that $1 billion government investment with an additional $1 billion of its own private company money, alongside contributing significant additional intellectual property, physical assets, and existing workforce, all specifically to establish an entirely new company called Andron, which IBM and the Commerce Department are jointly describing as America's first pure-play quantum chip foundry. Let's actually unpack what that specific term foundry means here, because it genuinely matters for understanding exactly what this money is actually being spent on. A semiconductor foundry is a specialized manufacturing facility specifically dedicated to producing chips, and in this specific context, quantum chips at genuine industrial scale, considerably beyond what a research laboratory or a single company's own internal, smaller-scale prototyping facility could realistically produce on its own. Andron will be headquartered in Albany, New York, operating as a standalone, dedicated 300mm quantum wafer fabrication facility, initially focused specifically on producing superconducting qubit chips and the supporting electronics wafers. Those chips actually require to function, with stated plans to eventually expand into supporting several additional quantum computing technical approaches beyond just superconducting qubits alone. That specific 300mm wafer size detail genuinely matters considerably more than it might initially sound like it should to a casual, non-technical listener. According to IBM's own Director of Research, Jay Gambetta, speaking specifically at IBM's own Think 2026 conference, this specific shift from the industry's more common 200mm wafer standard up to the considerably larger 300mm standard genuinely increases device output by roughly 30 times, while simultaneously increasing manufacturing complexity capability by a factor of 10 and tripling the overall rate at which individual devices can actually be produced. That's a genuinely significant, meaningful manufacturing capability upgrade, and critically, it's specifically the kind of manufacturing scale-up capability that existing 200mm facilities genuinely cannot easily replicate without essentially having to invest in an entirely new generation of specialized manufacturing tooling and equipment from scratch. Let's talk about where the remaining money actually went, because the specific dollar amounts genuinely reveal something important about how the government approached this whole funding decision. GlobalFoundries received $375 million specifically to establish its own separate domestic quantum manufacturing capacity, and in a related separate agreement, the Commerce Department will specifically receive a 1% equity stake in GlobalFoundries itself as part of that particular arrangement. The remaining 7 companies, all specifically focused on quantum computing research and development rather than manufacturing infrastructure, received considerably smaller and notably considerably more evenly distributed individual awards. D-Wave, Quantum, Rigetis. Computing, Inflection, Atom Computing, PsiQuantum, and Quantinuum each received exactly $100 million apiece, while a smaller, less widely known company called Dirac received $38 million. That specific funding distribution pattern genuinely tells you something meaningful about the government's overall underlying strategy here. Rather than trying to pick one single winning quantum computing technical approach and concentrating the vast majority of available funding entirely behind that one specific bet, the Commerce Department deliberately spread its research and development funding fairly evenly across 7 genuinely different companies, each pursuing meaningfully different underlying quantum computing technologies: superconducting qubits, trapped ion systems, photonic approaches, silicon spin qubits, and neutral atom systems. Officials specifically describe this as a deliberate portfolio approach, explicitly designed to strengthen and accelerate American leadership across multiple competing quantum technical modalities simultaneously, rather than betting everything on any single specific technical horse. Let's talk about exactly what minority equity stake actually means here, because this specific legal and financial detail genuinely matters enormously for understanding what kind of investment this actually represents. In exchange for this federal funding, the government is specifically receiving minority ownership stakes in each of these 9 companies, meaning the government becomes a genuine, real shareholder with an actual ownership percentage, but explicitly not a majority or controlling shareholder capable of directly dictating each individual company's own strategic or operational decisions. This specific minority equity stake structure genuinely represents a notable, meaningfully different departure from how the federal government has traditionally funded private sector research and technology development throughout most of American history. This isn't actually the very first time the current administration has specifically pursued exactly this kind of direct equity stake approach either, and understanding that precedent genuinely helps put this specific quantum deal into appropriate context. Just the prior year, the United States government took a 9.9% equity stake in Intel as part of an earlier separate CHIPS Act agreement, specifically focused on domestic semiconductor manufacturing more broadly. That earlier Intel deal genuinely represented the first meaningful signal that the government's approach to CHIPS Act funding was beginning to shift away from purely traditional research grants and toward this considerably more direct, hands-on equity ownership model. This specific quantum computing deal, distributing that same fundamental equity stake approach across 9 separate companies simultaneously, rather than concentrating it in just one single semiconductor giant, genuinely represents a meaningful, significant expansion and scaling up of that same underlying, relatively new government investment strategy. If you're finding this kind of detailed numbers-first breakdown of exactly how major government technology funding decisions actually get structured genuinely useful, this channel focuses on exactly this kind of careful, source-backed financial and policy analysis regularly. Go ahead and hit that subscribe button now, because there's plenty more of this kind of detailed breakdown coming your way. Let's talk directly about the specific claim embedded in this video's own title, that this investment represents a bet on building the world's first genuinely useful quantum computer, because that's a genuinely significant, weighty claim worth examining carefully and honestly rather than simply accepting it uncritically at face value. IBM's own public statements specifically framed this entire investment as helping the nation solidify its leadership position at the center of what the company describes as a thriving new quantum industry. One IBM itself estimates could generate up to $850 billion in total economic value by the year 2040. That's a genuinely enormous almost staggering projected figure, and it's genuinely worth understanding that it represents IBM's own internal, optimistic economic projection rather than some kind of independently verified, externally audited industry consensus estimate that every serious analyst in this space would necessarily agree with. The Commerce Department's own stated official goal for this entire 9-company funding initiative was specifically framed around accelerating solutions to what officials described as the most critical, currently unresolved technology challenges, standing directly in the way of developing utility-scale fault-tolerant quantum computers. Both of those specific technical terms genuinely matter and deserve careful, honest unpacking here. Utility scale specifically means a quantum computer that's actually large and capable enough to solve genuinely useful, real-world, economically valuable problems, rather than simply performing narrow, artificial demonstration calculations designed mainly to showcase impressive-sounding technical benchmarks without producing much genuine practical value. Fault-tolerant specifically means a quantum computer capable of reliably correcting its own inevitable computational errors well enough to actually complete genuinely long, complex calculations without those accumulating errors eventually overwhelming and corrupting the entire calculation before it can finish running. Here's the genuinely important, honest nuance that a simple, catchy video title like The World's First Useful Quantum Computer doesn't fully, adequately capture on its own. This specific government investment isn't actually funding one single unified project, specifically racing toward one clearly defined, singular finish line labeled the first useful quantum computer. It's funding 9 genuinely separate companies pursuing several meaningfully different underlying technical approaches, each working independently toward their own individual, company-specific versions of that same broader, shared long-term goal. Some of these specific companies may well eventually succeed in building something a reasonable person would clearly, confidently recognize as a genuinely useful, practical quantum computer. Others may not, or may take considerably longer than currently projected timelines suggest, or may end up pursuing a specific technical approach that ultimately turns out to be a comparative dead end relative to whichever alternative approach eventually genuinely wins out in the marketplace. Let's talk honestly about the genuine technical uncertainty still sitting underneath this entire considerably ambitious funding initiative, because it's genuinely significant and deserves fair, honest, direct acknowledgement rather than simply being glossed over in favor of purely celebratory, triumphant government press release language. Building a genuinely fault-tolerant, utility-scale quantum computer remains one of the hardest, most fundamentally unsolved engineering challenges in all of modern physics and computer science. And virtually every serious credentialed technical expert working directly in this specific field continues to openly acknowledge that meaningful uncertainty remains about precisely which of the several currently competing technical approaches, superconducting qubits, trapped ion systems, photonic architectures, or various other proposed methods, will ultimately, eventually prove genuinely superior at achieving that specific, difficult combined goal. That genuine underlying technical uncertainty is precisely, exactly why the government's own chosen investment strategy specifically embraced this deliberately diversified portfolio approach in the first place, rather than attempting to identify and concentrate essentially all of its available quantum computing funding behind one single, supposedly superior technical winner, spreading a meaningful amount of investment fairly broadly and evenly across 7 genuinely different companies pursuing several meaningfully different technical approaches simultaneously is, from a purely rational risk management standpoint, a genuinely sensible way to meaningfully hedge against the very real, well-documented possibility that any single specific technical approach, however currently promising and well-regarded it might presently appear, could eventually turn out to hit some kind of fundamental, currently unforeseen physical or engineering limitation that ultimately prevents it from ever actually reaching that shared, ambitious, utility-scale, fault-tolerant finish line. Let's talk about a genuinely notable absence from this entire 9-company list, because it reveals something important about how this specific funding decision was actually structured. IonQ, widely considered the largest, most commercially advanced publicly traded pure-play quantum computing company by current revenue, notably was not among the 9 companies selected to receive direct CHIPS Act funding in this particular round. That's a genuinely interesting omission worth understanding, especially given that IonQ has separately been pursuing its own aggressive expansion strategy, including a previously announced $1.8 billion acquisition of a company called Skywater Technology, specifically aimed at accelerating its own ability to develop and scale production of quantum computing hardware and services for aerospace and defense customers. IonQ stock still rose meaningfully on the broader announcement despite not being a direct funding recipient, reflecting how positively the market interpreted this entire funding. initiative for the broader quantum sector as a whole, even for companies that weren't themselves direct beneficiaries of the specific government dollars involved. That specific detail genuinely matters for understanding the government's own selection criteria and strategic thinking here. Companies like IonQ that already possess considerable private capital access and their own aggressive independent growth strategies may simply have been judged less urgently in need of this specific kind of federal manufacturing and research acceleration funding compared to companies more directly focused on the specific foundational infrastructure gaps like domestic wafer fabrication capacity that this particular funding round was most directly designed to address. It also suggests the Commerce Department's selection process involved genuine, deliberate, strategic prioritization decisions rather than simply distributing funding indiscriminately to every recognizable name across the entire broader quantum computing industry landscape. Let's dig deeper into the Anduril Foundry specifically, because it represents by far the single largest, most consequential piece of this entire 9-company funding package. And understanding its full significance genuinely requires looking beyond just the headline billion-dollar figure alone. IBM's own director of research specifically emphasized that the shift toward 300mm wafer processing represents a fundamentally different manufacturing paradigm than what currently exists anywhere else, specifically dedicated to quantum chip production within the United States. The Albany Nanotech facility, where Anduril will actually be based, already houses some of the most advanced semiconductor manufacturing tooling and infrastructure in the entire country, built up over many years of prior investment in more conventional, traditional semiconductor manufacturing research and development work. By leveraging that existing, already established infrastructure and specifically layering genuinely dedicated quantum-specific manufacturing capability directly on top of it, Anduril aims to operate its production lines continuously, 24 hours a day, 7 days a week, with meaningful automation specifically designed to allow the facility's own researchers to iterate through successive design processes. That kind of genuinely industrial-scale manufacturing capability represents a meaningfully different category of investment than simply funding additional academic research alone, since it's specifically targeting the practical, real-world manufacturing bottleneck that stands between promising laboratory-scale quantum computing demonstrations and genuinely mass-produced, commercially available quantum hardware at real, meaningful scale. Let's also talk honestly about the specific technical modality each of these 7 research-focused companies is actually betting on, because the underlying diversity here genuinely illustrates just how unsettled and open this particular competitive technical landscape genuinely still remains. D-Wave pursues an approach called quantum annealing, specifically optimized for solving certain combinatorial optimization problems, rather than the more general-purpose computing approach several of the other companies are separately pursuing. Rigetti Computing focuses specifically on superconducting qubits arranged through a modular chiplet manufacturing strategy. Quantinuum, formed through an earlier merger between Honeywell's own quantum division and a company called Cambridge Quantum, pursues trapped ion technology, an approach that offers genuinely high measurement fidelity, though it has historically faced its own separate scaling challenges as researchers try to link together larger and larger numbers of individually trapped ions. PsiQuantum, meanwhile, pursues an entirely different photonic approach, specifically using individual particles of light, called photons, as its fundamental qubit building block, an approach its own supporters argue offers genuinely superior long-term scaling potential, precisely because photons are inherently less susceptible to certain categories of environmental noise and interference that plague other competing physical qubit implementations. Atom computing and inflection both separately pursue neutral atom approaches, using individually trapped, laser-cooled atoms as their fundamental qubits, an approach that's gained considerable momentum and credibility within the broader research community over just the past several years specifically. Dirac, the smallest specific recipient in this entire 9-company funding round, pursues silicon spin qubit technology, an approach whose supporters specifically argue offers a genuinely promising manufacturing advantage, precisely because it can potentially leverage much of the same existing conventional semiconductor manufacturing infrastructure and expertise that's already been extensively developed and refined over many decades of traditional computer chip production. That genuine technical diversity across all 7 individually funded research companies means this specific $2 billion government bet isn't really best understood as a single unified wager on quantum computing, succeeding as some kind of unified monolithic technology category. It's considerably more accurately understood as 7 genuinely separate, individually distinct technical bets, each pursuing a meaningfully different path toward that same shared, ambitious, long-term destination, with the government's own money deliberately, strategically, spread fairly broadly across all of them simultaneously, specifically to maximize the overall portfolio's realistic odds that at least one, or ideally several, of these genuinely different competing technical approaches eventually prove successful at commercial utility scale. Quantum computing, stocks rallied sharply and genuinely significantly in direct response to this specific funding news, with each of the individual publicly traded, pure-play quantum computing companies included in this specific funding round jumping meaningfully higher within the immediate days following the announcement. That immediate, enthusiastic market reaction genuinely reflects real, substantial investor optimism about what this specific government backing could plausibly mean for these particular companies' own future prospects. But financial analysts covering this specific sector have also been careful, and genuinely appropriately cautious, to note that this immediate market enthusiasm arrived considerably faster and more forcefully than any kind of underlying verified business fundamentals actually changed for these specific companies overnight. The CHIPS Act funding itself should genuinely, meaningfully help reduce near-term capital risk for these companies and meaningfully extend their own individual development runways, giving each company considerably more time and financial breathing room to continue their expensive, ongoing research and development work without needing to immediately, urgently raise additional emergency capital from potentially skeptical, increasingly demanding private markets. But several of these specific companies, D-Wave, Rigetti, and Inflection, among them specifically, remain genuinely early-stage businesses operating within an extraordinarily capital-intensive sector, where realistic commercial timelines toward genuine profitability continue to be measured in years, and quite possibly, in the case of several specific approaches, in considerably more than just a handful of years. Financial analysts have specifically suggested that a meaningful amount of genuinely good news was already effectively priced into these specific stocks, almost immediately following this particular announcement, meaning investors considering entering these specific positions at that point were arguably paying a premium for optimism that, while genuinely understandable and reasonably well-grounded, still depends heavily on considerable future execution success that remains, by definition, entirely unproven and unrealized as of today. Some analysts have specifically recommended that investors interested in this particular sector might be better served waiting for subsequent pullbacks following these kinds of announcement-driven spikes, rather than actively chasing pure market momentum immediately following genuinely exciting, headline-grabbing news like this specific funding announcement. Let's also talk about the genuinely interesting political and economic philosophy dimension embedded in this entire story, because it connects directly to a considerably broader, ongoing debate about the federal government's own appropriate role in directly picking and backing specific private companies within an emerging, still uncertain technology sector. Critics of this specific broader approach point out that direct government equity ownership in individual private companies represents a meaningfully different and considerably more legally and politically complicated category of government intervention than the federal government's own more traditional approach of simply funding open-ended basic scientific research at universities and independent national laboratories, an approach that historically hasn't required the government to directly pick specific individual corporate winners the way this particular equity stake structure inherently unavoidably does. Supporters of this specific approach, meanwhile, argue directly that this kind of hands-on direct equity investment more closely effectively aligns the government's own financial interests with these specific companies' actual long-term commercial success, since the government itself now has genuine, real financial skin in the game alongside private investors, rather than simply handing out research grant money with essentially no direct expectation of any eventual financial return whatsoever coming back to American taxpayers. They also specifically point to genuine mounting geopolitical competitive pressure, particularly regarding China's own aggressive, sustained, and centrally coordinated quantum computing investment strategy, as a genuinely compelling, legitimate justification for the United States government adopting a considerably more active, hands-on, direct role in accelerating this specific critical emerging technology sector's overall domestic development, rather than simply relying entirely on private capital markets alone to eventually get there completely on their own, unassisted timeline. There's also a genuinely important practical question worth raising here that most celebratory coverage of this announcement largely glossed over entirely. Specifically, what actually happens to the government's own newly acquired equity stakes over the coming years, and whether American taxpayers can realistically expect to see any meaningful direct financial return on this considerable $2 billion investment eventually. Unlike a private venture capital firm, YTH typically structures its own equity investments with genuinely clear, well-defined expectations around eventual exit strategies, whether through an acquisition, an initial public offering, or some other clearly defined liquidity event. It remains genuinely unclear exactly how, or even whether, the federal government intends to eventually monetize or otherwise exit these specific minority equity positions. It's now acquired across all 9 companies. That genuine uncertainty matters considerably for evaluating whether this specific investment should ultimately be judged primarily as a strategic, national security-oriented technology acceleration program, where any eventual direct financial return to the government itself is considered a secondary bonus consideration at best, or whether it should instead be evaluated more like a genuine, disciplined financial investment where taxpayers might reasonably expect the government to eventually realize measurable financial gains, or at minimum recoup its own original invested capital from these specific equity positions over some realistic, clearly defined time frame. Based on the government's own public statements so far, the emphasis has been placed considerably more heavily on the former framing, national strategic technology leadership, rather than the latter, disciplined financial return expectations. Though that specific emphasis could certainly evolve and shift considerably as these particular investments mature and additional details eventually become clearer over the coming months and years ahead, let's talk about what genuinely happens next, because understanding the realistic path forward from here genuinely matters for evaluating whether this specific $2 billion bet eventually pays off as its most enthusiastic proponents currently hope and expect. These 9 letters of intent specifically represent an important initial step, but they don't yet represent fully finalized, legally binding, unconditional funding agreements. The CHIPS Research and Development Office has explicitly stated it continues actively soliciting additional proposals from other eligible applicants, specifically focused on advancing microelectronics technology more broadly within the United States, suggesting this particular quantum computing funding initiative may well continue expanding further and evolving considerably beyond just these initial 9 specific companies over the coming months and years ahead. For the specific companies actually receiving this funding, the genuinely hard, difficult work of translating this considerable new capital into actual, tangible technical progress obviously still lies entirely ahead of them. IBM specifically needs to successfully stand up its entirely new Andron Foundry subsidiary and demonstrate it can actually reliably deliver on that specific promised 30-fold manufacturing output increase at genuinely meaningful commercial scale. The 7 individual research and development-focused companies each specifically need to continue meaningfully advancing their own particular underlying quantum computing technical approach considerably closer toward that shared, ambitious utility scale, fault-tolerant finish line we discussed earlier. A finish line that, based on essentially every credible current technical assessment available, likely remains realistically somewhere between 5 and 15 years away at an absolute minimum, depending heavily on which specific credentialed expert you happen to ask and which particular technical approach they personally consider most genuinely promising. So let's bring this all together and land on the actual, complete, honest bottom line here. The White House genuinely did commit just over $2 billion specifically toward accelerating American quantum computing development, structured through a genuinely novel minority equity stake mechanism that meaningfully represents new, evolving federal technology investment policy rather than a simple, traditional research grant. That specific money is being distributed across 9 companies pursuing several meaningful, deliberately spreading risk broadly rather than concentrating everything behind one single, supposedly guaranteed technical winner. Whether this specific investment genuinely produces the world's first truly useful, practical, fault-tolerant quantum computer remains, as of today, a genuinely open question that not even the government's own most enthusiastic, well-informed officials can honestly, credibly guarantee with any real, meaningful certainty.